Hi everyone, and thanks for tuning in to XS's Market Outlook. In this short video, we're going to be looking at an important idea for trading this week with the rationale behind it and what traders need to be aware of in the next couple of weeks if they choose to take the idea. I'm Michael Stark, Financial Content Manager at XNES, and joining me today is Stanislav Berachov, Trading Specialist. Thanks very much, Stan, for being here.
Hello, Michael. Thank you for having me today.
What, Stan, is the idea for trading this week? What are you looking at and you think might be a good possible option to trade?
Yeah, I'm looking at potential gold trade, the long trade. So gold has been in a downtrend, but probably it's driven by the rumors of CPI publication next week and also publication of interest rate. So before announcement of serious news, before publication of serious news, market probably won't be able to break the support. So I expect it to rebound at least $50-$60 higher before next Tuesday. Before it will be logical, as we already see that the probability for the three-step hike in September, which is next week, is already 64%, meaning that there is no big room for speculation here around interest rates. So I think that before publication of CPI, which is, by the way, is expected to be flat, gold might not drop substantially, so probably it will hold above 1700 level, and we can initiate a technical trade there.
Okay, and what do you think are the key narratives that are driving gold? So you've mentioned, of course, that it's priced in the three-step hike. Do you think there's anything else that is possibly in focus to look at?
Yeah, I think that, so we have this inflation narrative already kind of flat. So we see that. So if you take a look at this chart, you see that inflation rate is going flat. So it's diminishing. So, and we've seen also some declining prices in Europe, declining gasoline and oil prices in Italy, for example. That was the first sign, and other signs as well. So the inflation has started to cool down a little bit. So that situation should cool down American dollar too, and treasury yields, which are moving up right now with the inertia. But there was a holiday yesterday, the Labor Day, so America was not trading in the markets. So it would be logical to see DXY, or American dollar index, pulling back, and that will cool down the downtrend for gold too. So, and also there is a statistical seasonal tendency for gold to grow in September, last but not least. So this is actually the best month. If we take a look at the seasonal studies, best month for the 30 years is September for gold. So that's not a number one reason, but that's also the additional reason of why we should look into buying gold potentially.
Mm-hmm. In summary then, the idea for this week is a potential buy for gold, which might move up fairly strongly from 1,700 and retest the highs from late August. And the key narratives that are driving that are the pricing in of a three-step hike by the Fed next week and the general cooling down to some degree of inflation around the world, and to a lesser extent, statistically, September is a strong month for gold. The key releases traders need to be aware of are coming up next week, namely US CPI, and of course the meeting of the Fed, which will be next week. So thanks very much, Stan, for joining us to give us this idea for gold and the rationale behind it, what traders need to be aware of.
Thank you, Michael. Have a good trading week, everyone.